Hello everyone and welcome into the channel. My name is Brent and in today's video we're going to go over stocks I am selling or have sold and stocks that I am buying at this time. So we're going to go ahead and go over number one, all the companies that I recently sold and bought, because these are the companies we're going to be discussing in this video, so we get that out of the way really quickly. Then we're going to go into number two, the companies that I sold and why I sold them, either because they're trading near all-time highs. All I'm doing is taking equity out of a position that is trading high and moving it into a position that is trading lower and offering me a better return at this current moment, value potentially, versus where the other company was at. And then number three, we're going to go over what companies I recently either added to within my portfolio or one of the new companies that I just completely added brand new to the portfolio. So we're going to go over those three things in this video. If you guys are brand new here to the channel, definitely go down below, hit the red button to subscribe, make it gray, hit the bell button to be notified every time I release a brand new video. And of course, give this video a thumbs up, make it blue, and let's go ahead and get into the video. So we're going to start off here on M1 Finance, jumping into the Invest tab. And number one, we're going to be looking at what companies I recently sold and purchased. So if you guys are joining here really quickly, we'll go ahead and talk about what companies I am going to be selling, or I have actually sold, right? I've sold out of a few and I purchased into a few new companies. So in this video, we're going to be discussing Merck, Lockheed Martin, Pfizer, and Methode Electronics as my companies, 4 companies that I sold. Now, one of these here was not on my sell list, but because I was selling at night before the market opened, kind of preemptively planning it, I punched in Pfizer. I didn't mean to sell and take profits on it, but it happened, and I missed on actually taking profits on Hormel Food and Johnson & Johnson. But we're going to go ahead and take a look at those companies as well. And then 4 companies that I ended up taking profits on and moving into companies that I were beat up on were Starbucks, JP Morgan, and Avery Dennison. And the brand new position in the portfolio is Waste Management here. So those are the companies that we're going to be discussing here in this video, and also Hormel Food and Johnson & Johnson. Now, jumping over into the fundamental charts here, we're going to be starting off at companies on my sell list. Number one, Merck. We're going to be taking a look at the 1 year here. We have price in the purple, the current yield in the orange, the 200-day in the blue, and the 50-day in the green. So right off the bat, Merck is trading near or at all-time highs. So as of close on Friday here, it is actually closed at an all-time high within the last year. So at this time, I just decided, hey, it's very similar to Pfizer. It's very similar to AVGED in the scope of, hey, it's trading near all-time highs. At this point, do I feel like it could go potentially 10, 20 times, or 5 to 20% return as of this point, or do you think it has more room to fall? So all I kind of took was it is trading at all-time highs. The risk to go higher is much heavier. It's not likely to happen. And the current yield that it was offering just a few months ago at a 3.6% yield, and it was priced down in the low 70s with a 3.6% yield, versus now it's nearly up $30 or $20 to $30 off that low here just a few months ago, and it is now offering a under 3% yield on this company. So all I'm doing is taking a position that has more room to fall and moving equity into a position that has more room to climb within that same time frame. So Merck was on my high risk area as far as not bad company to be invested in, because I'm staying invested in Merck long term. All I'm doing is moving equity around. Hormel Food was on my chalk block, but I didn't end up selling it. This is because I was doing my trades in the middle of the night, trying to, do my trades before I go to bed. That way M1 Finance sells and buys stuff in the morning for me. Hormel Food didn't end up actually taking profits on. That is fine here. It did trade down, hit that 200-day or 50-day moving average here recently at $51.80. So if I look at the last month here, we can see price traded down off that $55 price mark. Intraday probably hit that 50-day moving average, bounce higher. That's a pretty positive note. So overall, I may or may not take profits on this one here. I think it still has some room to grow. Maybe that was just a sign that I shouldn't take profits on Hormel Food and should just let it ride. So that is Hormel Food. Johnson & Johnson was on my stocks to sell, but I didn't sell out of this one. These companies have been on my sell list for probably a couple of weeks now, at least a month or so, and I just didn't take any initiative to go in there and sell it. And then I was kind of laying in bed one night and I was like, okay, what companies am I going to be buying or selling here? And I kind of just punched them in. I think I made this video or 2 or 3 weeks ago saying, hey, I got a video I want to put out over 4 companies or 5 companies I want to sell and 4 or 5 companies I want to buy. And then boom, forgot to record it. So this is that video. So Johnson & Johnson has definitely came down since I had that epiphany to kind of sell out of this company in the 180s. And recently broke below its 50-day moving average. So that 177.49 will now act as resistance versus support. And it may potentially kind of wiggle around between 177 and 169 here in the short term. I think it has more room to fall versus, potentially rebound, especially with the way the market is right now. Today, I believe we had a bit of a green day out here on Friday, but we'll see how next week, right? We're just kind of living it day by day. And it would have been nice to take profits, but hey, live and learn. So Johnson & Johnson didn't take profits, but had been one on my list to take profits. Lockheed Martin, this is one I did end up taking profits on. This one had been on my list to take profits on over the last few weeks, right? At least 2 weeks. And I did take a little bit of profits, $500 of equity removed out of this one. We can see here at the start of the week, it's not going to make much difference if I look at that chart. But yeah, it's been trading near these all-time highs here just really shortly within the last few months. And again, better opportunity for equity. So all I did was kind of move capital out of Lockheed Martin and move it into a position that I feel gives me a better opportunity here in the same time frame. So liquidated a little bit of Lockheed Martin recently within the week, dropped below that 50-day moving average. Now that 446 will act as resistance versus support, and it has the potential to drop down into, say, $390s to $400. I think that could easily happen with Lockheed Martin and in the current market environment. So that was my 4 companies that I took profits on. Now, the company that I completely liquidated out of my account was Methode Electronics. This one had been for a while doing pretty well in my portfolio, but this is one that's very speculative. And while it did offer a yield of 1.26%, it was a very small market cap company. It is doing okay in this environment, but during this next few months to years, I want to be in companies that have brand recognition, that have products and services that people use often. And when I think of Merck, Hormel Food, Johnson & Johnson, Lockheed Martin, Pfizer, Avery Dennison, JP Morgan, Waste Management, Starbucks, these are all companies that you can just hear the name and know their products and services. I don't know any products or services within Methode Electronics that I use or somebody else uses. And the company itself is fairly small at a small market cap. So I just decided, it's better to take profits now on this position and move it elsewhere. So this is just one of the companies here that I sold it at $44.06. And if I look at when I purchased this one, I started buying this back at $38. So I didn't make a whole lot on it, but I made some returns, and I also received some dividends along the way. So I did sell it at a gain, right? Pfizer here is one that I accidentally sold out of my portfolio. I didn't mean to sell or take profits on this one. I didn't really need to be taking profits on at this point. But it's okay. It was, it wasn't even on my buy list or sell list here, but we'll still take a look at it. We can actually see it is going to a little bit of, having a little bit of issues here. Hit a double bottom right here, but then quickly recovered. Lost the sort of upward momentum, kind of fell back down. Did another double bottom here, but it's actually higher versus the other one, so it's actually showing signs of support. So it's going to be basically using that 50-day moving average as support level. This could actually be a good opportunity to buy. It's on a good uptrend. We have the 200-day slowly moving to the upside. Eventually, that 200-day moving average is going to cross over the 50-day moving average. which will be a golden cross. So it'll just probably have in the future, if it kind of continues this motion, it should potentially have a better opportunity going forward. So this is actually one of those times where it could be an opportunity to buy Pfizer versus liquidating it or taking profits on this position. And then, so companies that we either took profits on purpose, or companies that we took profits on in accident. Now, number 3, right? We went number 1, just in general, the companies that we bought and sold. Number 2, the companies that we sold and kind of why we sold them. And that's not their full. We didn't go over the revenue, their net income, their free cash flow, because I'm not liquidating and completely removing them out of my portfolio besides Method Electronics. And that was just more one. I want to be in more stable companies versus any of its financial metrics that would really affect it. And then companies that I'm averaging down on right now, we have AVGED. This is one that here in the short term had been quite beat up. And then earlier this week, it actually broke above its resistance of 50-day moving average of 172.15. So now that 172.15 is acting as support here. So while during the week it did have a bit of a pop, it did come back down, but it stayed above its 50-day moving average. So it's acting more of support in a beat down companies, where in the past I was getting offered a 1 point, very low yield on AVGED. I didn't have a lot of opportunity to really average down on this one over the last few, years. I haven't really had a lot of opportunity since, say, mid 2021. So here with this recent fall, this is opportunity. It's offering me a slightly higher yield versus probably the last 2 years. And I'm just taking a little bit of opportunity to average into this company here in the short term. So I just kind of took equity and moved it into AVGED. JP Morgan Chase, this one has been in my portfolio for not too long. I think I started adding to it here recently, and it's just been on the downtrend. This one's actually trading below its 50-day moving average, its 200-day moving average. It's now offering a yield of 3.27% starting. If we look at this company just a few years ago, look at this yield. Since, say, 2021 up until 2022, you wouldn't be able to buy this for anything below a 2.4% yield. But here we are. We got raising rates. People weren't taking out mortgages or taking out loans as often anymore. So JP Morgan is getting beat up here in the short term, whereas their free cash flow, their earnings per share is still on the uptrend here. We can see here, where is it here? But I punched it in, but it's not going to matter. Either way, JP Morgan getting beat up here in the short term. As soon as it does have some sort of, who knows when it'll have some resistance, right? But I'm just taking profits of companies that can be taking profits on now, that I'm getting, that are very solid in the green, and just moving it into positions that are getting beat up. They could continue falling down. It's not going to hurt the portfolio performance long term, because those companies that are trading high will eventually come back down to normal, and these companies that are trading low will eventually return higher to normal and kind of have a better return long term versus where they're at now, right? So JP Morgan, just a very nice starting yield on that one at 3.27%. I don't see any issues with JP Morgan. Waste management is more of like, I want more utility, more stable companies within my portfolio. Waste management is just one of those companies that their services, right? No one's ever just going to not use their service. So this company is just going to be there. The city that I have a couple rentals in, they use waste management. So there's no other company I could pay to come and pick up the trash there. So wherever they're located at, wherever their services are located at, that's basically the only provider. Their company is going to go up and down with whatever happens in the market, but long term, their profits are going to continue growing, their earnings are going to continue growing, and here in the short term, there is some opportunity where it did dip here. So we see here it did break below its 200-day moving average. I bought earlier on this week, so probably not at the lowest point, but it is now making its way higher here in the purple. Recently crossed over its 200-day moving average. I don't think it's going to have any issue breaking above its 200-day or 50-day moving average in the green there, and just kind of continue trending to the higher, or kind of moving forward yeah, that 200 or 50-day moving average recently crossed over the 200-day moving average, and that's generally a good sign of the golden cross. So we shall see, but this is just a company where I felt it was a better name and service-based company where I understand what it does, how it works, and it's kind of a monopoly in a lot of locations versus another company that I didn't really have any really good backbone of. And then, of course, we have Starbucks here as our fourth position that we purchased into. Starbucks is just kind of on the downtrend, but pretty interesting here. During the 5-day, if we look at the percentage here, this one had a huge swing to the downside during the week. So just downtrending from the 9th all the way to the 12th here, just downtrend, downtrend, downtrend. And then on Friday alone, check out this 1-day performance. On Friday, made a full recovery in the week, up 8.15%. Ended it for the week down 1.2% versus being down nearly 10% in the week. So at a point on Thursday close, it was down 10% on the week. So I think Starbucks found a bottom, and I just kind of been buying it up. And that is some good opportunity. When you're buying a position on the downtrend, you don't know where it's going to end up stopping at and having some sort of rebound. But when it does rebound, these red days, it can happen. It can just go on and it feels like it goes on forever. And then all of a sudden, it'll stop being red. And in a single day, it'll bounce and recover everything that it's done in the last 4 days, the last 2 weeks. They can happen very quickly. So in this case, Starbucks had lost nearly 10% there within 4 days. But within 1 day, it was able to make almost all of it back. So the red days come very, often. But those green days, when they do happen here during these markets, they can rebound very quickly. So if you sell out in the red just because it's being very hurtful and you're taking, emotional damage, you can really miss out on the opportunity for the upside and profits. So those are the companies that I am buying and selling within the market. There's not a whole lot I guess I would want to really discuss. We could look at the revenue, net income, and free cash flow and their earnings per share. Do I have that? Yes, I do. I don't think there's anything wrong with these companies here. We'll look at the 10-year really quickly. Merck is looking positive. Again, Merck, I'm not completely sold out of this one. I'm still involved in Merck. I think it's a great company long term. Hormel Foods, we can see its revenue moving higher, net income, free cash flow, earnings per share. Everything's been in the green, just uptrending. Yes, it's had a couple hiccups here, but we can kind of see here in the short term. We'll just stick with the last 3 years. What's the company doing over the last 3 years? We can see Hormel Foods did downtrend in their orange and green, which is their net income and earnings per share. That makes sense. They're both basically line in line. But here recently, as of July 2021, they kind of been turning it around and on the uptrend. That's probably why a lot of investors are moving money into Hormel Foods just recently. They're kind of consumer defensive. Johnson & Johnson, always a good company to invest in, especially when you have opportunity to kind of buy it on those dips. Lockheed Martin, nothing wrong with this one, just took profits on it. I think it's a great company long term. Method Electronics, this is one I ended up selling and liquidating out of my portfolio. I don't think there was anything really wrong with it. Free cash flow kind of took a nosedive here over the last 5 years, starting back in 2021. But overall, earnings per share and net income is still moving to the upside. Pfizer, nothing really wrong with that one. I'm just kind of averaging. I did sell out of it in accident, but still am holding it every Dennison. This one I'm averaging down on even more. So great financial metrics across the board over the last 5 years. JP Morgan, everything solid there as well. Waste Management, everything's moving double digits over the last 10 years. And JP Morgan did have a bit of a dip, with China between 2020 and 2021. I remember in China, there was a lot of stores that closed. That affected Starbucks price there for a while. If we bring in price in the purple, there was a bit of a dip with China sometime, I believe back in 2020. They closed a whole lot of stores that had affected Starbucks pretty negatively. But here we are. We're not even in that whole issue right now. There's not a lot of closures. There may be closures overseas as well. But we're not really in that environment as much, and we can see here their other financial metrics as far as their net income, free cash flow, revenue, everything's still recovering and moving higher here versus back in 2020, 2021. So I don't see any issues with just Starbucks to start buying it, and in this dip here recently, just opportunity. So that is going to be it for this video. Let me know down in the comment section below. Do you guys own any of the companies that we covered here in this video, or do you plan on buying any specific companies that we covered in this video, or any of them in your buy list? That would definitely be interesting. Also, let me know, what are you buying recently? I know a lot of investors maybe are not fixed on buying individual companies. I don't put as much money into individual companies as I do into ETFs for probably the last few years. I haven't put a lot into individuals. I max out my Roth IRAs in this company, this portfolio. I invest in individual companies, but in my other portfolios, my Roth 401k, my own Roth IRA, my taxable account, they're not really filled with too many individual companies. It's mostly 85-90% of the portfolio is the S&P 500, VTI, or VU, just depending on how much liquid, just how much cash is in that account, that I'm able to buy shares of specific companies to kind of have the maximum opportunity. So that is going to be it for this video. Appreciate everyone hanging out with me. Again, if you guys are brand new here to the channel, definitely go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video, and of course, give this video a thumbs up, make it blue, and I will see you guys in the next video. Bye bye.